do when I face with something like this. When I first bought Bitcoin, I wrote the first ever Bitcoin strategy piece and made a price prediction based on what I understood about Bitcoin back in 2013, 12. It was the first ever piece written by anybody. And I said, listen, I think it's worth $1 million. And it was trading at $200. And I had some basic maths, but the same kind of idea, using trends and everything else. And I said, I'm assuming I'm wrong by 90%, still worth $100,000, and it's currently $200. It's the best trade you'll ever do in your entire life. And that proved out to be true. So let's assume that Raoul is more and I'm 50% wrong. It's a $50 trillion asset class. You get to $1 million Bitcoin-ish, right?
Mm.
And assuming whether it's that dominant or less dominant and what happens to it. But you can see the magnitude of the returns. So that's a, 15x return in Bitcoin.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Raoul Pal reveals his bold price predictions for Bitcoin, Ethereum, and Solana, while sharing strategies for investing in crypto and avoiding pitfalls. Let's catch him to uncover these exciting insights.
I'm an investor, so being wrong is part of the thing. What's hard is via helping so many people at Real Vision and elsewhere, it is a weight I carry on my shoulders because I'm trying to bring as many people across the line and unfuck their future and all of these things. And I asked myself those questions, and I go back to the simple thing. There is the graph of the adoption of this. If that's going to stop, we've got an issue. But then how are we going to solve problems of digital identity or contracts in a globalized world or any of these things without this technology? I can't do it, right? It's like a magic technology. The Byzantine generals problem was a real complicated problem that nobody had solved until Bitcoin.
Maybe AI creates a better blockchain. Maybe AI creates a better system.
Yes, it could do. But how long away is that before we adopt it? It adopts that technology, some quantum, cryptographic, whatever, right? Is there a need for it yet? Why are we disrupting a new industry that's not been disrupted? But yes, no investment comes without risk. Crypto comes with that risk, the risk that governments will try and shut it down, even though they've tried and it's like a cockroach because it's distributed and it's everywhere. Yeah, there's the risk the blockchain you invest in becomes less valuable. There is the cyclicality of this asset that can fall 70%, 80% every 4 years. You have to deal with that. There's the risk that you lose your coins. There's all the risks in the world, and that's why you get paid the return. So there is no certainty in this world. I live in a probabilistic world. But if you can show me the world is going to be less digital than today, and you can show me a better way of dealing with a lot of these structural problems that we have, and you can show me that the community, the groundswell of individuals, don't forget, this is driven by individuals. We've front-run the institutions. The institutions weren't allowed to invest in it, but we've been able to put our money in before they did. We've created it. If I see any of those factors changing, then I'll worry about it.
Bitcoin's recent surge above $100,000 has reignited optimism among traders, with some targeting a price of $138,000 in the near term. After a tumultuous end to 2024, marked by periods of heavy selling, Bitcoin has kicked off 2025 with an 8.5% increase. Analysts see this as a pivotal moment, particularly as the market braces for potential policy shifts under President-elect Donald Trump's incoming administration. For the first time since December 8, Bitcoin closed a daily candle above $100,000, a psychological milestone that bolsters bullish sentiment. Crypto trader Posty noted similarities between Bitcoin's current trajectory and its explosive rally in the first quarter of 2021. Based on historical patterns and diminishing returns, Posty projects that Bitcoin could reach $138,000 by February. Another analyst, Crypto Chimpanzee, suggested an even loftier target, predicting that the cryptocurrency could soar to $200,000 if it mirrors the parabolic surge seen in previous bull runs. The Coinbase Premium, a key indicator of U.S. retail investor sentiment, recently returned to its break-even point after weeks of selling pressure. This shift suggests renewed optimism, particularly among U.S. investors. Bitcoin researcher Axel Adler Jr. highlighted that 90% of the total Bitcoin supply is currently in profit, reducing the likelihood of severe drawdowns unless an unforeseen black swan event disrupts the cycle. Despite this bullish outlook, some caution remains. CryptoSigned emphasized that $100,000 remains a critical inflection point, warning that a failure to solidify support above $99,000 could result in a retest of the $90,000–$88,000 range.
Simply, we talked about in a digital world, everything goes to zero in value. That is debasement. What it means is too much of something makes it less valuable. I can come out of the desert. I will pay you anything for a bottle of water. Give me 1,000,000 bottles of water. I'll pay you nothing for them. Right? There's too much of it. Now, how you say, well, how can there be too much money? But what happens is the economic system revalues things in this weird world, in this weird way, by debasement. So debasement in the old times was, if we take one of those gold coins, debasement was, that was, let's say, 1 ounce of gold. Then I was the Roman emperor. I would just snip off a little bit of the gold. You wouldn't notice, and you'd still value it, try and pretend it was the 1 ounce. But somebody else would say, no, it's actually worth less. I've taken that slither as the emperor, and I've used it and spent it on sports cars, and you've now got a less valuable coin. And the country has less value. So the money is less valuable. It's called debasement. The more of it that's around in an electronic age where you just press the button and you create money, then what happens is the value of money goes down. So let's say, people can understand it simply as, let's say you go on holiday and you go to a country that has a very weak currency. Let's say it used to be Mexico, let's say. You're an American, you went to Mexico, everything was cheap because the currency kept going down. But for Mexicans, it actually got expensive because the purchasing power of your peso went down and you couldn't buy as much with your peso. What we're doing is, ever since 2008, the whole world, all the big economies in the world, hit 100%, all the governments hit 100% of GDP in debt. So 100% of the economic value of that country was in debt. And that means that just paying the interest on that debt starts to become a burden. So let's say your economy is growing at 2% a year. Let's say your interest rate was 2%. Well, 100% of the economic growth basically goes to pay the interest payments, because somebody needs to generate the money to pay them. But at the time, corporations were over 100% of GDP in debt, and so were households, 2008. Everybody was in a debt orgy. The financial system was just lending everybody. And then it all fell apart. And so what they stopped doing was, really, corporations and households stopped borrowing as much money. They, in fact, restricted money to us. So in these economic times, we've actually been able to borrow less money while house prices have gone up by debasement. I'll show you that in a sec. And the governments have taken on this obligation. So they've been massively growing their debts.
Calamos is set to launch the CBOE Bitcoin US ETF Index ticker, CBOJ, on January 22, offering a novel way to invest in Bitcoin with downside protection. This ETF combines Treasury securities and options, resetting annually to provide investors with a new upside cap while protecting against negative Bitcoin returns. Such structured protection ETF have gained popularity in equity markets, as seen in Calamo's other offerings, CPSY and CPRI, which offer 100% downside protection. The introduction of CBOJ comes as institutional interest in cryptocurrency surges, with global inflows into digital asset products reaching a record $44.2 billion in 2024, driven by the success of spot Bitcoin ETF. Notably, BlackRock's Shares Bitcoin Trust, IBIT, amassed over $50 billion in assets within its first year, underscoring the appetite for such products. By holding CBOJ units indefinitely, investors gain diversified exposure to Bitcoin's growth while mitigating losses during downturns. This launch aligns with the increasing demand for safer crypto investment vehicles amid Bitcoin's volatile market dynamics. At present, Bitcoin trades at $101,696.58, up 2.03% over the past 24 hours. With CBOJ, Calamos continues to innovate in the ETF space, meeting the needs of risk-conscious cryptocurrency investors. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.